Well, hello, Maverick traders. Nice to see you this morning, and to our few European traders, good afternoon. We are just about 8 or 9 minutes away from the ECB press conference. Let's go ahead and just jump into what has already happened. So, with this news report, basically it comes in two stages. So, 45 minutes before the ECB press conference, so roughly 7:45 a.m. Eastern Time, we get the ECB statement, and it's just the official statement. And then 45 minutes later, we get the ECB press conference, where the ECB president takes questions and gives a little bit more information about what the ECB is thinking. Now, again, the ECB press conference is quote unquote off script. This is where you can get a lot of surprises. This is where, again, we already know what the official statement is. This is where the press will ask questions to get a little bit more information. And so sometimes you get the big moves off of the ECB press conference. Today was not that day. Today we got the move off of the ECB statement. So let's go ahead and take a look at what is going on with the euro right now. This is euro dollar. And you can see the euro has taken a big move to the downside. All right, so let's talk about what the ECB has said. We've already taken a half a position on this news. So the ECB was widely expected to keep everything where it is. And I actually had a discussion / debate, which Ankit and we never have discussions anymore. It always just turns into debates. But we were talking about this specific meeting, and my premise was that the ECB just announced in November, so 4 months ago, that they were ending their quantitative easing program that they've had for years and years and years. And so here we have, again, a central bank that has had their foot on the gas for probably like 7 years, and they finally took their foot off the gas. Now, the problem is that the European economy has been weakening over the last 4 or 5 months. When Ankit and I were talking, I said, hey, look, I don't see how the ECB can end its program after 7 years and then 4 months later put the foot back on the gas. Well, that's exactly what happened. Exactly what happened. So we got news out this morning that, as you can see, the market was not expecting, the market was not pricing in, that the ECB has extended their window to the end of 2019. Now, previous guidance has been that they were going to keep rates steady until the summer of 2019. And then it was widely expected that the ECB was going to start hiking rates after the summer of 2019. Well, in their statement this morning, they said that they are going to wait until the end of 2019. So effectively, they pushed out their flat guidance another 6 months, which the market was not expecting. They also announced some more LRTOs, which, again, this is where they basically incentivize banks to make more loans, aka quantitative easing. And so, as you can see here, the move in the euro was to the downside. This was not an expected move by the ECB. And if you are a believer of effective or efficient market theory, like I am, the belief is that everything that is already known is already priced into the market. So the expectations were going into the meeting that the ECB was not going to do anything. So the euro against the dollar was priced at 113.10. Once new information comes out that the market is not expecting, the markets must reprice. They must reprice to show that change in expectations. And that's exactly what we're getting. So we have already taken a half position at 112.77 right here. We have a stop up here at 113.08. So I'm looking to add another half a position to this. But I want to go and just show you what has been going on with euro and dollar. And I want to go out to a 1-year daily chart because this says it all. We have seen a really, really, really long low base. We've been in this base really going all the way back to, I don't want to go back to May 22nd, but let's go back to August 14th. So that's when we had that first bottom at 113. We have been bumping along the bottom of 113 since August of 2018. So we're talking about 8 months of a base. The last bounce we had was pretty anemic. It did not go up to the top of the range, and here we are at the bottom of the range. There is potentially a pretty big move in euro dollar coming down the pipeline. So again, I just want to open this up to just show you where we are in relation to the big picture of the euro. We've been low basing for 8 months. This is potentially the kind of news that can break a currency out of an 8-month low base. So I went into this meeting thinking that the euro was actually going to be a decent currency because, number one, the last round of economic news we got was a little bit better. It was just a little bit better. And number two, we're starting to see the pound, which has been very, very strong, start to get a little weak. And I figured, okay, that will probably help the eurozone as, as currency flows in and out of countries. If one country's currency is down, that money has to flow into another currency. With this new news, I'm looking at this thinking, boy, this could be the news that breaks this 8-month low base. And I'm trying to see where in the world the next level for this currency is. We're probably going to get some short-term support here at 111.5. But then past that, we are looking at possibly down to 109. And again, I'm having to go back to all the way to early 2017 to get readings this low. So obviously, I'm looking now at short euro. My expectations, again, on the euro have changed with this new information. And so the big question is, okay, well, how do we play it? And this was my biggest question. My biggest question is, okay, I understood, okay, it looks like euro short is now the play. The ECB is back on the quantitative easing train. The big question is, what do you pair it against? Well, if you take a look at currencies like the Aussie and the Kiwi and the CAD, well, they haven't been great lately. They just haven't been great. Now, they are up today, but yesterday, the Aussie lost a full percent. The CAD lost almost a full percent off of the Bank of Canada news. The Canadian economy has not been doing so great. So we're looking at other currencies saying, okay, well, where do we go? So the first thing I looked at was euro versus pound. The problem is the pound is weak today. Now, that being said, if we take a look at a daily chart, let me tighten this up a little bit. We do see a nice little bear rally bounce off the bottom here. So 85.25, we bounced up to 86.25. We're starting to turn over. So to me, the pound was a possibility, but we also could look at the possibility of the yen. So again, I'm just going back through. If you know you want to be short euro, the question is, what do you pair it up against? And so, like I said, the Aussie, CAD, Kiwi, they're looking okay today. But again, the problem is they've been terrible over the last little bit. So if we want to look at other European currencies, we can see the European currencies as a block are weak. So that really leaves us with the dollar and the yen. The dollar and the yen. Now, my expectations for equities this week were that we'd be in a base and then we'd break out to the upside. Equity futures are basically flat right now. So to me, that really only leaves me with the dollar and the yen as potential pairs for this euro. And when I take a look at dollar versus yen, let's use this chart. If I take a look at dollar versus yen, the question is, okay, what is looking better right here, right now? And you can see that we've got a dollar here that, at least in the short term, is looking to hit this resistance here at 111.18. We've got a little reverse head and shoulders pattern right here. If it breaks through this 111.18, it's definitely the currency to be long. So again, if someone said, Rob, I want to be short euro against the yen, I would say, you know what, that sounds okay to me. All right, so let's go back to euro versus dollar because the press conference has just started. Now, for those of you, if this is your first press conference, then what you need to understand is that it starts at 8:30, and then what happens is you get Mario Draghi is going to read the official statement. He's going to read the official statement, and then he's going to take questions probably about 5 minutes into it. So it takes about 3 to 5 minutes for the ECB president to read the statement, and then they go into Q&A. So this is where, again, the Q&A is either going to bring a rebound in the euro, or it's going to bring a continuation in the euro. And again, of course, we're looking for a continuation in weakness, but we always could get the other side. So here's a problem here on the trades like this. I'm looking back at the chart, thinking, okay, where is my second entry going to be? If I look on a 15-minute chart and I go back to last week, I don't see any signs of where I should be on my second entry. I'm now looking at a hourly chart, and I'm going back, and I'm saying, okay, now I'm starting to get into some support levels. So it's pretty clear that there's some support at 112.60 down to 112.50. So we've got this big band of support that we can find back in February. And it looks to me like, okay, that is going to be the first test for this trade, around the 112.50 and the 112.60 area. So I'm expecting there to be a short-term bounce in this area based on prior support levels. If it breaks this area, then the next question is, okay, well, where is the next level? And to find the next level, I've got to go back even further to try to find out, okay, where is that next level? And I'm going back, and I really can't see any. So to me, that's where I want to put in my second stage entry. And you can see that the currency pair is dropping as we speak. So again, I'm going to put in a sell stop at 112.54 for another half position. And again, I'm going to use I'll just use a stop order here. We don't have any big fast moves here. All right, but I'm going to be bringing this down to 112.54. All right, so I'm going to go ahead and make that active. Now, as you see, we are getting some bouncing in this area that we expected. So I'm going to be hanging out with an order that says, okay, if it goes below that level, I want to go ahead and add my second position. And then, of course, we're going to need to tighten up our stop. So my original stop was 31 pips. So short at 112.77. Original stop at 113.08, 31 pips. I'm going to go ahead and, when I take my second position, basically maintain the same risk. So if I get filled here at 112.54, let me do some quick math here. That's going to be 112.65 is going to be 65 and a half, to be exact. 112.65 and a half is going to be my average cost, which is going to be basically right here at this level, 112.65. Again, a 31 pip stop, which again, I had a 31 pip stop on a half position, so I got to cut that in half, so that's going to be a 15 and a half pip stop. So my new stop is going to be at 112.80. So if this order gets filled, I need to move my stop on my whole position down to 112.80. Again, that's going to maintain my original risk on the trade, which is the equivalent of 15 and a half pips on a full position. Now this is where, again, hopefully you've heard me say this before. If not, this is always good advice. It's kind of weird to call your own advice good advice, but I feel confident in that. I remember when I was a young trader, I was a news hawk. I was looking for news, and I would literally log in and watch like earnings conference calls. I would listen to what the CEO and CFO would say on a conference call. I would dial in. Now, of course, back when I was a young trader, we didn't have the ECB meeting on a live stream like we do now, but you could literally log in to the ECB live stream and watch the conference as it's going on right now. You could be watching the questions that the press is asking Mario Draghi right now. I used to do that, and do you know what I found? I found it made me a worse trader. Why? Because I would hear something, and all of a sudden, it would go into my brain, and my brain would be like, Rob, you are a smart guy, and you just heard this information, and you start to process it, and my brain would process it, and it would come up with what is going to happen. Here's the problem. That didn't always match up to what actually happened. Now, my brain processed this is what should happen. But the problem is that the trade is going to do what it's going to do. And I remember one time I was actually up in Canada and I did not have access to be able to dial in and read the stuff. And I remember I was trading a U.S. payrolls report. And I made a trade. I only had the chart. I didn't have the ability to look at news or watch news. And I made the trade, made some money, and it wasn't until later that day I realized, oh my gosh, I don't know what the payroll numbers were. And I realized it doesn't matter. I made the trade, I made some money. I didn't need to know what the actual news was. As a trader, I just needed to be on the right side of the trade, and that all comes down to the charts and current price action, support resistance. So for me now, I actually, when a news announcement comes out, I mute my TV and I just trade off the price action. And as you can see right now, the price action, we're bouncing around this 112.55, but it is not having a significant bounce. We are not rallying back up off of this press conference at this moment. We are basically just retesting. So whenever a stock, a currency, a future does this kind of price action, to me, this is a really good indication that it wants to go lower. If we're not having a significant bounce off of support, and support just basically it hugs it for a while, again, this is basically, low basing. This is why low basing and high basing work so well, is that if it can't have a meaningful bounce here, some pretty decent support at 112.55, then to me it's a great sign that we are exactly in the right place. And eventually our second order is likely to get triggered to go lower. All right, so again, this is Euro US dollar. As I said earlier, I think the other option is Euro Yen. I think Euro Yen is another one. Now you can see the Euro Yen is actually a little weaker, which tells me that if we pulled up the dollar yen chart, we're going to see that the dollar has been a little weaker against the yen. Well, not so much. All right. But again, this to me are the two trades. The other trade I think that looks interesting is Euro CAD. Now CAD got absolutely slapped yesterday after the BOC news. And you can see this is the BOC, the Bank of Canada, announced that they were basically on hold, which everyone knew, but they were a little bit more on hold than people expected. And you can see that we're now strengthening in the CAD. We do have oil that's up nicely this morning, which is helping the CAD. And if we take a look on all the currencies, we can see that the CAD is actually the strongest currency at the moment. It is up 0.14% against the yen, which is the largest of all the currencies. So if someone also said, Rob, I'm thinking of Euro CAD, look, I'm fully supportive of Euro CAD trades as well. That being said, I'm looking at CAD being nothing more than a kind of a short-term bounce, because Aussie, CAD, and Kiwi have been more weak than strong lately. I like the dollar trade here. I actually like the euro against the dollar. And again, like I said, the euro against the yen also makes some sense. But I'm expecting there to be a little bit of a bounce in equities here. And because of there's likely to be a bounce in equities, at least in my analysis, that should hurt yen and be a little bit more beneficial to the dollar. So that's why I am in euro dollar. So let's go back to euro dollar. Let's see if we got filled on our other position. We have not yet, but it looks like, again, whenever you see price action like this, when it comes down to support and the biggest bouncing you're getting is 5 pips, that's a really good sign that it wants to go lower. All right, do we have any other any questions on any other pairs we want to take a look at? All of a sudden, the euro has turned. The euro that has been basically fairly strong this week. To me, this is news that obviously the market was surprised over. It was not priced in. I think we're going to spend the next couple of days repricing in some weakness in the euro. All right, I have a question about dollar Swiss franc. All right, now the Swiss franc is going to be very tied to the euro. So the euro Swiss franc is usually pretty correlated. But let's take a look at the euro Swiss franc pairing right here. So this is euro Swiss franc. So you can see that off of the news, the euro has weakened against the Swiss franc. But take a look at how correlated these currencies are. So I'm going to make a little challenge to you. Say, hey, okay, so you want to be short Swiss franc. Okay, if the Swiss franc and the euro are pretty highly correlated, and you look at the euro Swiss franc chart, and the euro is weaker than the Swiss franc, to me, euro is likely going to be weaker than Swiss franc. Now that being said, I think the dollar Swiss franc, that's the question I have, I think it's a decent trade because I think the euro and the Swiss franc are going to stay relatively correlated, which means that this is basically the same trade as euro dollar short. So I like it. On a chart, it looks fine. The biggest thing I'm trying to point out is this the best trade? Is euro dollar better than dollar Swiss franc? I think it's basically the same trade. I just think that, again, if the euro loses let's say the euro loses 1%, I think the Swiss franc loses 0.8%. And so if that's the case, I like the euro better on the short side. But this is basically the same trade. All right, I have a question on euro Aussie. Now look, euro Aussie is going to be exactly the same as my thoughts on euro CAD. So the Aussie, CAD, and Kiwi have been weak lately. And if we take a look at their charts here, you can see that this week the euro has really done much better against these currencies. That being said, right now there's no question. You want to be short euro. What do you want to be short against? Right now, the Aussie is the second strongest currency. That being said, it was down 1% yesterday. So we're having a little short-term bounce higher. I like this trade in the shorter term, meaning if you're looking to be in and out today, I think this is probably a better pairing. I think Euro CAD is the best pairing, and I think Euro Aussie is the second best pairing to be in for a shorter term move. However, if you're looking to hopefully be in this move for the next couple of days, which I'm looking to be in this Euro US dollar trade for the next couple of days, then I want to be in something that has a better outlook over the next 3 days, which I think dollar has a little bit better outlook. So short term, no question the Aussie and CAD are probably going to be a better trade right here, right now for the short term. But I think if you're looking to hold this, I like dollar and yen crosses a little bit better. But the biggest thing is euro short. Euro short is the trade here, at least at the moment. All right, just coming back to euro US dollar, have not been filled yet on our second leg. I was hoping that we could get filled here on our second leg so we could make all of our adjustments here in the live session, but you don't need me to stick around waiting for a move lower just so you can watch me move a stop down. That's that is very anticlimactic. If that's what you're waiting for, like, okay, I cannot wait to watch him move that stop down. Question. I've got a question of, am I going to hold the euro US dollar over the weekend? The answer to this is no. And let me tell you why. I have a rule in Forex. I only hold risk-off trades over the weekend. Now, this is questionable whether euro-dollar is a risk-off trade. Again, risk-off trade means that a trade that will do well if there's really bad news over the weekend. So if I was in euro-yen, then yeah, that's a no-brainer. That's a no-brainer. Euro-dollar, ooh, that is a tough one. I can't call this a risk-off currency. I just can't. I can't call euro-dollar a risk-off currency right here. So the answer is no. Because it is not a risk-off currency pair, I will not be holding this over the weekend. But remember, we're going to let price action determine when we get out of this. When the price action says it's time to get out, then, it'll be time to get out. But if it does go all the way into the weekend, then no, it is not going to be held. All right, if we are filled, so again, the current stop is at 113.08. 113.08. And the entry price was 112.77. So that is 31 pips. So that was a 31 pip initial stop on a half position. So basically, if we were in a full position, we would be carrying a 15.5 pip stop. So right now, current stop is at 113.08. If we are filled at 112.54, our average cost will be 112.65.5. That's basically where our average cost is going to be. So we want to maintain the original risk. So on a full position, the original risk is 15.5 pips. So basically, we're going to be at 112. I said 112.80 before. Technically, it's going to be 112.81. We add the half pips. That's going to be where the new stop should be if you want to maintain your original dollar amount of risk. And that's what I want to do. So if filled, is going to be moved to 112.81. That's going to maintain our original risk level. All right, so again, this is euro dollar. I have a question about this trade. Obviously, we have payrolls reports tomorrow morning. So we have the U.S. payrolls report. So understand that if you are looking to hold this a dollar trade through all the way through Friday morning, you are also going to be heading into another news event, the U.S. payrolls report, which could affect the trade. So that means when you're looking at trades, if you don't want to be holding through the U.S. payrolls report dollar trades, then you would look at doing Euro CAD, Euro Yen. But again, we also have Canadian employment report tomorrow. So really, you'd want to also avoid CAD if you're looking to avoid the news tomorrow morning. Then you'd be really looking at Euro Aussie, Euro Yen. I don't have any problem, and I actually really like one of my favorite trades is to go into a major news announcement with a good fat profit in a trade. So let's say that this gets filled. Let's say that the euro drops another, let's say 0.25%. I'm going to go into that news announcement with a good maybe 0.5% profit built in. So that means that I'm going to lower my stop down to 0 to break even. And basically, I'm playing on the house's money. And if that payrolls report comes out and it comes out very positive for the dollar, I could potentially get another 0.5% on this trade that really the news event was the catalyst for that I may not have got. So I personally really like to stack up currency pairs that have lots of news coming forward. But obviously, sometimes that bites you. Sometimes it bites you. Sometimes it doesn't. All right. Just have a question. If you're looking to making the trade here, look, you're going to determine your own stop. You're going to determine your own stop, and that's going to be based on whatever it is you use your stop. There is no technical reason to have a stop at 112.80. If you're looking for some technical reason to have a stop there, it doesn't exist. It does not exist. This is just, again, we're trying to maintain our regular risk. So if you're entering the position for the first time, where you would put your stop, boy, if it's, you can take a look at, oh boy, this candle's a really weak candle to make a decision on, but here's a spike down. We got to 112.85. Maybe that's a place to put your stop right above that. That makes the smallest technical sense. This is just a little spike down that really probably doesn't mean much. So, really, boy, it's 113 would be the first logical place technicals. All right, so we're filled. We're filled. So I'm going to go ahead and move our stop, and then we'll go ahead and sign off. So I now have a 5-lot position, and I'm going to move my stop down to, as I said, 112.81. 112.81, and it's pretty easy. That's already done. So I adjusted my position size to reflect my full position, and I moved my stop down to 112.81, and there we go. At this point, we need to determine what we're going to use as our exit. Again, I always like to look at the parabolic SAR is short term, meaning if I'm looking to be in a trade for a fairly short period of time, I'm going to use parabolic SAR. If I want to be in it a little longer, I will use the 20-day moving average, which is the red line actually. So the red line is the 20-day moving average, and again, this is going to be medium. And if I want to be in it longer, I'm going to use the 50-day moving average, which I consider to be my longer term. Since I'm looking to be in this longer term, I'm looking to use that 50-period moving average. Now you can see the 50-period moving average is still up here at 113.02. It's going to take a while until that moving average is below my stop. So my break-even stop is probably going to be there for at least another, I'm guessing, at least 4 or 5 or 6 hours is how long that it's going to be until it gets below my break-even. So I'm going to be using this 50-period moving average as the trailing stop once it gets below my break-even. All right, thanks for joining me, everyone. Let's see if we can get some more pips on this, and hopefully we see some continued weakness in the euro. Thanks for joining me. Goodbye.